Thank you for tuning in to another edition of the Vulcan Report. Right now, I want to show you some snapshots or screenshots, if you will, of the actual current market, and then we're going to take a look at the end of day snapshots that I normally show you. All right, right now you're looking at real time. Okay, this is real time movement in the market, and you'll see what I mean when we get further along. Okay, this right here is the U.S. dollar index to futures. Okay, as you can see, we broke out. We're continuing to rally. This is a weekly chart. This right here is a weekly chart right here. Okay, below this is a daily chart of the U.S. dollar, intraday 60-minute chart, and an intraday 5-minute chart. I want you to see something here. All right, as you can see, long term we're in an uptrend. Okay, you can see that here in the weekly chart. You don't need any, technical indicators or anything to see that. All right, this is just bare price action. All right, no indicators, no trend lines or anything. I just want you to see price. All right, track with me here. Here in the daily chart, you can see we are in an uptrend. Okay, this red bar right here is the current real-time action. Okay, you see the prices are constantly changing before you. Okay, notice how we pulled back here intraday, right? Tested the initial breakout from this previous high here, and we're building support because this market wants to continue higher. Now we are getting a correction. The euro is up a little bit today, but the euro is still in an incredible downtrend, looking like gold, and oil, which we'll get to in a moment. You see these two bars here on the 60-minute chart. You see this one and this one. Okay, and an economic report came out this morning at around 8:30 Eastern Standard Time. That report was the U.S. jobless claims number, which is a big deal. Within the last several years, economic reports, especially big market moving events like the FOMC and jobless numbers. It used to be back in the day you did not trade ahead of those reports because the volatility would just be insane, just incredible market movement, right? And we would just stand aside. Then we changed those rules and said, you know what, it's okay to trade those reports now because volatility just all but disappeared from the markets over the last couple of years. But today something unique happened. Volatility on a market moving report happened. And here's the proof. Here's the hour chart on the US dollar. Look at this. You see how normal these bars were. If I say the average bar, I would say the average bar price was like, yeah, let's see here. Not even 10 ticks. 88.30 to 88.20, right? Well, we'll just say it's one of these bars. We'll say it's 10, 10 ticks, okay? Well, look at this. We went from 88.30 down to 80, almost 87.80 on the first initial move on the jobless claims. The market started moving, within like 2 minutes before the release of the report, which means that people are paying to receive the reports a minute or two before the general market receives those numbers, and then they react accordingly. It didn't used to be that way. It didn't used to be that you could pay for those numbers. It used to be everyone had to wait, but now the exchanges looking to make money or making it so that you can buy advantage now from the exchanges. You can buy advantage, meaning you can buy dedicated lines and servers into the exchange. We call that high frequency trading. For a lot of money, you can buy that, and you can have access to those quotes. There are other ways you can do it too, but the bottom line is unfair advantage can be bought now at the exchange with the right price. Okay, that's what it's come down to, ladies and gentlemen. It is what it is. Then the next bar, we continue. We took out the low of the previous bar here. All right, we spiked down, closed low, closed lower, and then key reversed on in the third hour. Okay, and that's where we are now in the U.S. dollar. Still bullish, still trading above the initial breakout. All right, we spiked to it. We didn't close at it. We spiked to it. Day's not over with yet. Of course, anything can happen. We could go black and come all the way down here, but I doubt it. But I just want you to see this. I want you to see these relationships and see what's really going on. Okay. All right, let's move on and take a look at crude oil right quick. Try not to make this video too long. Okay, here's the weekly chart here on the crude oil. As you can see, still established downtrend, right? Now on the weekly, you can see we put in a low, right? And now we're attempting to retrace some of that movement so that, it looks like we're still going to close lower here, right? On the weekly, but we're trying to set up for more of a correction and get back up to this $90 barrel. We'll see what happens. A lot of people are calling for more downside. We'll see. I don't believe that. Crude oil is, like I said, the widowmaker market, the most gangster market on the planet. And yes, it can have powerful trends, but even within its powerful trends, there are sharp retracements and booms and busts and rallies and crashes even within its trends. And I've demonstrated that time and time again in my videos. Look here at the daily chart. All right, we came down here, right? We closed lower, spike low, right? Key reverse the next day, but not really, because we're now consolidated within this initial breakout bar from here. Now, you can argue and say that the low is really not in yet because we have these spike tails here, all right? These little support lines for these moves. We're forming like some kind of a flag where we're going to break out. We haven't broke out yet. We're going to break up or break down. I'm going to say that it's possible we're probably going to break down first because, again, we have no closes down here. There's been no test of this spike. No test at all. We're going to need another close. Even if we don't take out this low here, this reaction low, we're going to need to close somewhere down to here. You can't have this huge air pocket like this. All right, if we're building a base for support, we're going to have to crack. We're going to have to come back down and close down here before we key reverse back up. All right, we really haven't done that yet, in my opinion. All we're doing is consolidating some of this movement in here. All right, a lot of bot checks within here. All right, so $80 a barrel is strong resistance right now. We could get back up there before reversing back down again, which was probably more than likely a possibility that could happen. All right, on the hourly, let's see here. On the hourly, pretty much the same thing. Wildness after these reports this morning. You see spike, spikes, spike both ends here. Look at the spike here, spike here, spike here, spike here. Market doesn't know what it wants to do. It's running both sides of the market, even though it has an upward trajectory on the 60-minute chart. Okay, and then your 5-minute. Here's what's been going on since we've been doing the video. Here we are. All right, let's see what other shenanigans we can see now in the gold and the silver real quick, and then we'll just wrap this up. Let's see here on the weekly. Here's your gold. Okay, it's struggling. Every breakout, it just can't do it. Here we got here, came back down. Can't do it. Can't do it. It's a dead market, man. There's nothing going on here. All right. Here's your daily. All right. We did have this initial leg down. This is the next level down. All right. And then we come up here. Can't quite get back up to this 1180. I say this trend here is still intact. This downtrend is still intact. Look at this. It's still intact. Look at that. We're not going anywhere. Again, this is just looking at price action. No indicators whatsoever. Look at this. 60-minute chart. Okay, so you came back here and bounced off of your reaction lows. Now we're up 20. But we're still down for the week. Look at this. Look at this weekly chart. Today's price action really means nothing. Look at this. It's nothing. It's just profit taking today. All right. Taking a look at your silver. Same thing. Price action even weaker. Look at that. Boom. Here's your daily. Not a thing. Look at that. Today's price action means absolutely nothing. There's nothing going on here. But one thing to take note of here is this Russell. The US dollar and the Russell you need to watch closely. This is dangerous. This is a downtrend channel. Don't let it don't let it trick you. Look at this. You know, this is down, my man. This is not good. This right here is not good. Okay? This right here as it goes down is widening out in the range but not taking out the previous highs. All right? You got to close above 1171.80 and then close above 1201.80, and Thursday's close was 1166.80. I mean 1168.80. Couldn't even do it. And then today we went to 1178.60, but we're weak and we have a total inside day. We have an inside here. We're staying inside the lows, which is okay, but we're still looking weak, man. It's not good. Not good at all. Could be some profit taking, could be some confusion and fear. Also, like, where are we going from here? What are we doing? Nobody really knows, you know, yada, yada, yada. But at the end of the day, you still have to trade these markets and you still have to make a decision in what it is you're going to do. All right, let's look at one last thing. Okay, take a look now here at the gold with the technicals here. All right, this is what I'm talking about. We need to get up to this. We need to close above this dot right here, this orange dot. That's 1158.88 or 1158.80 in order to negate the downtrend in the gold. All right, that's where we need to close at today. The last thing I just showed you with us being up like 22 bucks is 1165.3. So far it's attempting to do that today. It's trying to negate the downtrend, but it's still gonna have a hard time, a hard way to go once you get back up in this area here. You got a lot of air pockets of resistance up here between this bar, and this bar. All right. So I just wanted you to see the difference when we looked at the actual real-time chart, what's happening now versus yesterday's close and the end of day charts, which is what we were accustomed to doing here. All right, so just want you to see those relationships and where we need to be. So remember, take what you can, give nothing back, and have a great and wonderful weekend. Don't forget to follow me on Twitter and follow me on the blog. Go ahead and sign up so you can receive instant emails as I update some technical pictures throughout the trading day and stuff on the blog, which I will start doing. And also, you want to follow me on Twitter because sometimes I'm unable to do a video and whatever, and I will tweet my thoughts and what I'm saying and what's going on, especially when I get bot checks, and I will post those in real time so you can at least get a heads up on what's going down and what's about to go down, especially before it hits the wires and hits the television. All right. So stay informed, stay encouraged, and like I said, have a great weekend.